Right guys, in this video I'm going to be explaining to you the basic understanding of candlesticks. This app that I'm on right now, or website should I say, is called TradingView. This is not where we take profits. This is not where we insert trades. This is not where we exit our trades. This is where we do our analysis. This is how we identify when to enter, when to take profits. So before I begin, let me explain the apparatus of this platform. Right now, I'm on the Bitcoin USD chart, and you can see on the right hand side here's price action. So right now, the price of Bitcoin is $11,756. The bottom axis is the time frame. What's in front of you, these red and green things, is what you call candles. They are price action. So before I explain to you how this works, let me go a little bit further and show you this column here. You can see these are time frames. So right now I'm on the 1 day time frame, and if I was to put the cursor on this candle here, the bottom shows me it's the 3rd of September, next one 4th of September, 5th, 6th, and so on. Whatever time frame I'm on is representative of the candle. So because I'm on a daily, each candle represents a day. If I was to go on the 4 hour, each candle represents a 4 hour. If I go on this candle here, 1 a.m., 5 a.m., 9 a.m., and so on. And the same thing in the minutes as well. So I'm presuming you understand the gist. Now, before I explain to you how these candles operate, let me tell you the purpose of the bulls and the purpose of the bears. The purpose of the bulls is to push price action upwards, and the purpose of the bears is to push price down. Now, when you see a red candle, it represents that price action closed lower than what it started with. And when you see a green candle, it represents that price action closed above than what it started with. Let's look at this for instance. 3rd of September 2020. Price action started here. Here's what you call a candle body, and the line is what you call a candle wick. Body, wick. So the body is the colored in bit, and the wick is that skinny line you can see across the board here. So you always start at the candle body. You always start at the top of the candle body, and you can see price began at 11,387. However, price closed at 10,172, meaning it is a red candle, and meaning that the bears pushed this all the way down. Let's go to the next candle, the 4th of September. Price began at 10,172 and price closed at 10,497, which means the bulls pushed the price action up, closed higher than what it began with, making it a green candle. So how you identify where price action closes and opens is you go from body to body, not the wicks. So you're probably wondering to yourself now, what the hell are these skinny lines? What are the purpose of the wicks? Now, like I said, each candle represents a daily time frame, because we're on the daily time frame. So let's go on the current day time frame, right? So going from what I just told you, we start at the candle body. You can see yesterday's candle, we closed at this price range at 11,512. So it has to align with where we opened with. Again, 11,512 is where we opened with. Now, what actually happened, and this is how the wicks tell you a story of what happened to price action during the day, is we actually started the day with a dump, and we went all the way down to 11,420. Bears push price action at 11,420, where momentarily the candle would have been red because it's closing and it's lower than what it started with. However, bulls push price action all the way up to 11,833, where we can go to the top of the wick, and they lost the ground over there because bears push price all the way back down to 11,753, where price action is right now. And as you can see on the right hand side, we still have 6 hours and 41 minutes before this candle close. So if the bears was to push price action all the way back down to 11,642, rather than this price action up here be colored in and be a candle body, it would turn into a wick. Now, if price action pushed all the way up to 11,950, this will no longer be a wick and this will be a candle body. On the contrary, if price action, if the bears were supposed to, somehow dump this all the way back to 11,259, that simply means this will be a red candle because price actions closed lower than what it started with, and this entire candle body would become a wick. Something like this, for instance. Let's talk about this one. So, just in case you didn't get it, bulls closed 1st of August at 11,811. So we started the day at that price action. We started the following day at 11,811. Bulls push price action all the way up to 12,131. However, they weren't able to sustain it before the daily candle closed. So bears push price action all the way down to 10,542. But again, they weren't able to sustain it until that candle closed. So then bulls were able to push price all the way back up to 11,060. But because bears managed to close the price action below than what it opened with, it was a red candle. That, boys and girls, is in its simplest terms of what's in front of you in terms of understanding candlesticks and the story behind it. So when you do get like a candle like this, and you can see a few times, ground bulls were able to protect this territory here, protect that territory there. You can see there's a lot of lower bottom wicks where bulls are pushing price action up and protecting their territory. You can see they may lead to a little bit more of a pump, which we had here, but we'll get into that a little bit more at an intermediate level. Right now, the purpose of this video was for you guys in less than 10 minutes was to understand candlesticks. Now, what I like to do is I actually have my candlesticks in black and white, because people make the mistake where if they see a red candle, they automatically think it's, we're going to dump, because that's not always the case. Again, if I show you what's a good candle to show you, that doesn't, if it's a red candle, doesn't mean there's price action is going to go a lot more lower. If you have a look at this region here, it's a red candle, but doesn't mean this is bearish, that we're going to fall down, because bulls showed so much strength in this candle that they were able to protect this territory. It normally means that this region here is protected by the bulls and we're likely to go up. So for that reason, I don't like to have my candles red and green. I like to keep it neutral, and I do like this professional outlook. So that is understanding candlesticks in a nutshell. If you enjoyed the content, please subscribe to the YouTube page and leave a like. Any comments are always most welcome. Other than that, I look forward to making more videos for you guys in the foreseeable future.